The Bitcoin dominance rate has reached a 9-month high of 45.5%. This reflects investors' interest in the leading cryptocurrency due to its perceived stability compared to other cryptocurrencies. This surge in BTC's market share is accompanied by a 3-day surge in its price, and coincides with increased instability in the banking sector. The spike in BTC dominance is seen as healthy for the crypto market, as it signals a lower level of speculation. This increase in BTC's market share has also occurred amidst a decrease in the supply of stablecoins and increased regulatory scrutiny. This article highlights the recent surge of Bitcoin's dominance rate to a 9-month high of 45.5%. This is due to Bitcoin being considered a less volatile asset than other cryptocurrencies, as well as a mild positive consumer price index report, which caused a spike throughout the crypto market. Fundstrat Research noted that this surge could be a reflection of investors' interest in Bitcoin reigniting in the face of traditional banks such as SVB failing. The article also mentions that stablecoin unrest has surfaced in recent weeks, with the world's second-largest stablecoin USDC depegging from the dollar following the collapse of Silicon Valley Bank and the steady decline of stablecoin supply over the past year. The 2008 financial crisis was caused by the opaqueness of the mortgage industry. Banks packaged A-rated securities with lower quality ones, and these bundles were passed off as top-rated securities when they were sold to investors. Ralph Kubli, a board member of the Casper Association, believes that blockchain technology can be used to fix this problem. He argues that for tokenization to succeed, tokens must be smart, meaning the financial agreement must be machine-readable and the parties involved must agree to the code itself. Peter Gaffney from Security Token Advisors also believes that double tokenization of mortgages can provide transparency. This transparency extends to not only the pricing and ratings of the MBS itself, but also the underlying mortgages. This article evaluates the potential of blockchain technology as a solution to the 2008 financial crisis. It begins by outlining the primary cause of the crisis, which was the lack of transparency surrounding mortgage-backed securities. The article then introduces Ralph Kubli, a board member of the Casper Association, who believes that blockchain technology can solve this problem. Kubli argues that financial agreements must be tokenized in a way that is both machine-readable and agreed upon by all parties involved, and he suggests that the algorithmic contract types unified standards is a good starting point. Finally, the article mentions Security Token Advisors, who are also exploring the potential of tokenized mortgages. Overall, this article presents an exciting potential solution to the 2008 financial crisis, though it remains to be seen if and how this technology will be implemented. Crypto futures experienced liquidations totaling $300 million over the last 24 hours due to higher than usual market volatility. Both long and short traders were affected, with the majority of the losses coming from shorts. Bitcoin and Ether briefly rose before dropping again. Bitcoin and Ether futures accounted for over $140 million and $80 million of the liquidations, respectively. The recent collapse of Silicon Valley Bank is causing investors to look for alternative assets. Bitcoin is seen as a secure system for holding and moving money. This article explains how higher than usual market volatility affected crypto futures, leading to $300 million in liquidations in the past 24 hours. It was observed that large liquidations can signal local tops or bottoms of steep price moves, allowing traders to position themselves accordingly. Bitcoin and Ether briefly inched above $26,000 and $1,770 respectively on Tuesday. However, these tokens soon dipped as much as 5%. Consequently, both Bitcoin and Ether futures saw over $140 million and $80 million in losses respectively, with 58% of losses coming from shorts and the remaining from longs. Additionally, futures on Conflux's CFX tokens and Filecoin's FIL had $8 million and $5 million in liquidations respectively. The article also explains how investors looked for alternative assets following last week's collapse of Silicon Valley Bank, with Bitcoin's value proposition being highlighted. It is expected that there will be increased demand for Bitcoin as a superior system for holding and moving money securely in the coming weeks.